Welcome to the final bar. It is Greg Schnell, and I am here with you this afternoon covering off all things that are interesting in the stock charts world. The show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be able to find the inflection points for minimum risk and maximum reward. And I have Zach Dillon, our producer, on board with me. Good afternoon, Zach. How are you doing?
Doing awesome over here in sunny Seattle.
Well, that is good. We have lots to cover off today, so I want to jump right in and try and get rolling. If you could put your questions in the question panel, and then Zach will feed those to me towards the end of the show. But today I want to get set up showing.
If we could go ahead and show them that really quick. If you could go ahead
Okay,
and go over to that browser and then just show them where that question.
Okay, so we're here on the Stock Charts live TV dashboard, and if you're in the question mode, you'd go in and type in your question here, and then hit the Ask button, and then for polls, you click this other tab, and then you can fill in one of your questions. And so the intent of this show, the way I want the show to go, is that I would like to show people how to use stock charts to invest well. So not a lot of hypothetical trade setups, but more about setting up your account and then doing some of the bigger picture analysis on charts. And this week, I think last week I talked at infinitum about how the US dollar was preparing for a move to the upside, and we've seen that. Said stay away from gold and that kind of stuff. So I don't really want to cover off a whole bunch of charts today, but I do want to make sure that I think one of the basic tenets of stock charts is making sure you're set up for success. And so what that means to me is having chart lists that work for you. And by setting up those chart lists, then you're going to be able to find the best stocks and chart patterns you like and try and make some money out of it. So we're going to set it up, those three things, and we're going to work on the sorting right at the end and make some choices from that. And as always, thank you for watching the show. I think it's really important that education is part of the deal, and hopefully you'll learn quite a bit today. So we're working through from the advanced scan workbench, and what I want to talk about here specifically is so many people are overwhelmed by this, but it is really set up very, very simply. And what we want to do today is pick an industry group. And one of the more volatile industry groups is the biotechnology space. And what we see on the biotechs typically is large fast movements both directions, and so it's a little bit hard, but I'm going to pick it as a group to set up, and you don't have to invest in this group. But the whole idea behind setting up specific industry groups is to help you make more money and find diversity in your portfolio. So in this case, what we would do is we would go through and we would pick a group. And one of the things when you set up a scan, what you're looking for is a list of commands that will go through and find this. And so you're only going to have to do this like one time or once a year. So this isn't hard, and you'll be able to go back and watch the tape. But it always fills out this basic block. And then we just added and group is biotechnology. So I'm going to go show you how to do that again. And what we do here is we go down to choose industries and sectors. We're going to click in here. We're going to scroll down, and these are listed by sector: energy, financial, healthcare. We're going to pick biotechnology. We're going to add that. And when we do, it'll pop up in this box always at the bottom of the page. So then I want to add something else. And the reason I want to add something else is because it's not just the biotechnology, it's also the pharmaceuticals that move well. So we want to go and get both of those. And let's just call them highly leveraged. They move very quick both ways. And so we want to be aware of that move. And so what we see here is because we are using or, in other words, if I put the word and in here, you can't be in biotechnology and in the pharmaceutical industry groups. You have to be in one or the other. So the first command is and, group is biotechnology, or group is pharmaceuticals. So that's great. So now we're going to run that scan, and it's opened a scan result. So it said mismatched square brackets. So what did I do here? Made a brief mistake and I can't see it. Mismatched square brackets. Make sure the number are equal. Oh, I see. The one on the back of the volume. And so let's run that scan again. And what we see here is we've got 562. You're only allowed to keep 500 stocks in a chart list. And so one of the problems would be that you couldn't just go put these into a chart list. So then we have to change our criteria a little bit. And so the easiest way to do that is either to add a closing price. And in this case, we could add a close, whatever, greater than $3 or greater than $5, whatever your number is. Biotechnology stocks can really surge. So we would look for a couple of different ideas. And I'm not really a big fan of investing in stocks that have $1,000 price tag or something. So I'm going to pick and close as great less than 200 just to knock out a few. And let's run that and see what we get. So that drops us down to 343. Now you could tighten this up any given way. This particular stock doesn't have a scooter ranking, so we could put and scooter ranking is greater than 2 or something like that. Any command like that you would like, and let's just use the drop down menu so you don't have to work through it so hard. But here's and scooter, and we're just going to put greater than 2.1. Okay, it's going to drop off the worst stocks in the whole thing, and we'll see what we get there. Okay, so that drops us down to 239. So we've got stocks greater than $3. So the group is biotechnology or the group is pharmaceuticals, and the close is greater than 3, and the close is less than 200, and a scooter ranking is greater than 2.1. If they don't have an SCTR ranking, usually it's because they have such a small market cap or their price is so low. So we're going to use that as a filter. Now, one of the things we can do is we can click on this SCTR column. And what that'll do is it will sort the strongest stocks first. And that doesn't necessarily mean that's the best stock to invest in, but currently it's the best stock that's already started to run. So let's store these results in a new chart list. And I just want to go over here and show you how I have mine set up. So this is written about in the Stock Charts for Dummies book. But what you see here is I have all of my sectors listed, and I put a common number at the front, and then I put a hyphen and the letter A, and in this case, we're going to use the letter B for biotech. And then you're going to put a name for it there. And so down here, here's the coal industry or the cloud sector or consumer staples or copper mining, and you just try to keep updating them based on what you've got in those groups. Now, we could go to all of the ETFs and find names that way. I think it's better to use this scan because you're going to spend a lot more time. You're going to find some great stocks. And when you do that, you're going to want to dump them in. So I'm going to put 6010-B or -B biotech and pharma, maybe we'll call it. So 6010 B dash and biotech and pharma. Okay, and we want to preserve the sort order because we've got it sorted by SCTR or the scooter ranking. And again, the scooter ranking, that is a one single number that will put the strongest stocks first. And so what we want to do here is just, we don't really need the sector and industry, and the reason we don't need those is because we pretty much know what they are. But now what we want to do is with this, we've got all of the information in this chart list group. Now this is going to come up with my default look, and if that's okay for you, that's fine. If you wanted to add something else, you could do that. But I particularly like to look at these, and because biotech stocks are typically not what I could call multi-year trending. They typically run up and roll over and run up and roll over. And you don't necessarily get the opportunity to stay in them very long. But, this move here from 25 to 111, you can do okay if you can hold it for 3 or 4 months. So we want to try and find moves like that. And The easiest way, you could either go into candle glance view by using this drop down menu, and it would show you the most recent moves, or you could just do 10 per page. Now, as an example, my candle glance view right now is set up like this. So I've got the scooter ranking on here. I've got a PMO, and I've got two moving averages, a 50 and a 100 period. I've only got 6 months, and sometimes that's a little too short. So I'm going to use, rather than go in and change all that today, let's keep one lesson at a time here, but I'm going to use the 10 per page. And again, these are going to put the top stocks or with the best price action first. And you can see the scooter ranking is just pinned to the top. This stock has already broken its uptrend. So for me, it would be a no touch until it's consolidated for a while and was starting to set back up again. This particular stock, Fate Therapeutics, had a really nice push up today, just got people interested and then fell back down. So, this is really nice, actually, how you get this run up and then a check back, and it sits here and waits. And this is either consolidating with buyers, new people interested in the stock, but you really want to wait until it either resumes its uptrend or you get out. And you can see that this thing spiked to 1 million shares today, probably just as it broke out. So that's quite a bit of interest showing on that breakout. So lots of people are hunting this. Now here's another chart. And again, we can go into actions and we can hit annotate and just click right on the chart. What you see here is we've got a downtrend line going on here. And the real question for me would be, as soon as it's starting to break out, I'd like to own that stock. I probably don't want to break it until it's broken the downtrend, but you can also see about a 6-week consolidation period here. One of the big themes in investing, if you go back and look at Facebook or Microsoft or all of those big stocks when they first started to make their move, they come out of a big giant base, they shoot up, and then they consolidate for a while. Now this went from $15 to $49. Why would it need to consolidate after being up more than 200% in 2 months? So of course it's going to consolidate, and that shouldn't be a surprise. Now what we don't know is which way it's going to break out, and so these stocks have a lot of leverage to them. But again, if you're trying to make 10% a year and you can find something making 100% in a couple of months, these are really, really interesting places to look on the stock. So just going through and labeling these stocks will help you. I'm just sorry about the quick scroll here. That's the one we just labeled. Here's one that literally went vertical, pulled back, went vertical again. There's definitely something going on in this stock. I don't know anything about what they do, but for the most part, you're waiting for it to break back out of the consolidation to the upside again. And you could continue to watch this. I don't think you're ever going to buy this base down here, but the whole idea in pharmaceuticals is once they have something that's starting to work, you want to get on board. And the scooter ranking isn't going to let you get on really until it's above the 200-day moving average. And I'm going to show you one exception to that in a little bit. So as we work through these stocks, you see they all have this same trait where they had nothing going on. And of course, this would look pretty big if we only saw the stock in this period. These moves would look huge. They would fill the whole range of the page, because what the computer does is it scales everything to fit this dimension, this height. Well, this thing went from $20 to $160. And that's the kind of rapid move that you could see just trying to follow new highs in this particular sector. Now, it's so high risk, you can't put a huge amount of money into any one trade. But the whole idea is having a diversified portfolio where things are kind of broader. And by doing that, you lower your risk. So here we have, let's say, a $5 or a $6 or a $7, wherever you want to draw your line. But you can see that this was coming down hard, dropped from $16 to $1. It's now working its way, and it's building this head and shoulders base. So left shoulder, the head, the right shoulder. And now we're looking for a breakout here. I don't know that you have to wait until $8.61. Really, you want to get through most of this trading area. But as this stock starts to turn up, that's going to give you the type of look you've got. Now, we've already looked at whatever, 5 or 6 stocks, 8 stocks, because it's at 80. And there's some significant moves. Here's one that just went ballistic, 250 to 660, and built a consolidation pattern over here on the right. And the way this normally works, this is not a surprise. You get a parabolic surge, you get a pullback, and then it consolidates, and then it goes on its next surge. So, maybe you want to break through 425 or through 460, whatever, somewhere in here, you want to be aware of this stock that had really good news and has pulled back, and now you get an opportunity to look at it. All of these stocks, what you'll notice is the scooter ranking kicks up, and that gives you a signal that gets interested. And the first time they cross 75 is when I'm particularly interested in the scooter rankings. And you can see here, this one started to jog way back here. So it broke out of the 6-month base, consolidated from 14 to $15 to $17, and then it broke out again, then it consolidated, broke out again, and it consolidates. So it's working its way higher, but again, if you're getting in around $15 or $16 and it's going to drop down to 14 or 15, it's big swinging volatility, but you can see how the 200 was resistance, became support, and this stock starts to work its way higher. They don't all go ballistic, and so it might take some time for you to get comfortable holding them, and you have to live through some wide swings. So last year I had a stock that doing that, just looking at the scooter ranking to try and check out the stock, and it starts to break out, and you can see this one literally tagged the 75 line from here. And of course, on that previous chart, it went up to 75 and down multiple times before it really got going. But the purpose is you want to see price action that's meaningfully changing to get you interested in the stock. And then you're going to start to look through them. I can look through all 400 of these and not lose interest. I'm looking for chart patterns I like to see. Here you see this huge tabletop, and all of a sudden it breaks out. This is 830, 860, 825, 910, 950. This is slowly starting to migrate higher. It's starting to stay above the 200-day moving average. And, you're trying to pick it up in here somewhere as it broke out. Let's just say that you bought it on the breakout at 860. Sure enough, you're the first person in, and then the thing pulls back and it just wants to see if you're going to hold. Drops $2. So, some of these on their first kick up, you're going to have to ride a little pain, or you're going to watch them, put them on your watch list because it made a new 52-week high and pulled back, and then watch for some sort of MACD signal or scooter ranking reversing or something like that that gets you in. And you can do a whole bunch of research in the back of these companies, but I actually prefer not to know the story. And again, huge volatility. So I think the one I bought last year went up over 100% and had two 50% pullbacks. So really wild trading, and I had 1,000 shares or something. And it was, obviously nice to own, but the issue is you really have to be able to deal with the volatility. So I strongly recommend making small picks that can help you in the area. And so with that, you're going to get different risk parameters, stocks that you're interested in. And I don't recommend building a portfolio out of biotechnology stocks. I do recommend trying to find, one or two or whatever, very small positions in 4 or 5 of them. And if they take off, great. And if they don't take off, it hasn't damaged your portfolio. But there would be what I would call the accelerants in the stock. And so it's that kind of thing that we want to look at. Now, so we've walked through a few of these, and I think you get the feeling like, look at how nice these charts are and how the scooter goes to 75 and they break out, and you still have to figure out how to manage this huge move. This was 25% in a month. This was, almost a double in 6 weeks. This was down 30% in a month. So a huge volatility, and that's why I would suggest, but look at how nice these chart shapes are, and they just keep climbing. This one is just breaking out of a 3-month base today. This is a turtle trader where you're getting a new 55-day high, and the stock is starting to break out. It's been a strong stock for almost a year. It's gone from 30 to 100, and there's some movement there. And Tom Boley and I always talk, and I always say, Tom, you love biotech and pharmaceuticals and that kind of stuff, and there's a reason for it. I mean, these stocks move very, very quickly, and you could sit and hold a consumer grocer, and it might move. The scale on the left hand side has gone up whatever 50% in a year and a half. And these stocks have, this is $7 to $30. This is a 400% scale. So being aware of the scale is pretty important. Anyway, as we work through these stocks, I hope you see some of these, huge, beautiful bases that are breaking out. Just giving you an idea, here's one with a huge gap. And one of the things you'll notice after a huge gap is usually they consolidate sideways. So you don't have to buy it on that gap. You want to watch what the price action does. And in this case, it gapped up. And this is a meaningful gap. This was $20. And it moved up and it wobbled a little bit sideways, and then it gapped again. Now this is very hard to own, because would you have picked it up down here? Well, it was below the 200. It moves up here. Would you still be willing to hold it and live with $20 of volatility? And then it moves up again. Anyway, you have to decide if this is your investing style. But a lot of times this move through the 200, these stocks are either trending up or down. They don't really have a sideways trend to them. So these are huge moves. This one was $1.50 and it went to $13.50. So the stock's got 1,000% range on it in a year and a half. Again, there's just so many nice charts in here, and you can keep looking. So I see so many people that get what we call analysis paralysis. And, that's a thing that we would like to leave to government work, where they want to analyze everything forever and do nothing. What we want to do here is we have to make investing decisions today, make our money, and move along. And so that is more the purpose of using this methodology. And so here you see the 200-day moving average slicing down, breaks out through here. Look at the stock gap through it, consolidates for a while, and a big move to the upside. This is a pretty smooth one. The scooter ranking has stayed up here for almost a year and a half with a couple of dips below. You still have to figure out, again, how to manage these trades. But if you're getting in when the scooter ranking starting to kick up at around $40 and you're selling it up here at around 90 or something, you can make money doing that. Okay, so I've shown you some pictures. Now, one of the things I did on the Twitter poll today, or on the poll today, was Twitter, Shake Shack, and Intercept Pharmaceuticals. And so the reason I ask that question, and it's not really a question, it's more an answer. And the reason I want to show it to you is these three stocks all had something in common. So we're going to start with Intercept. And if we look at the 5-year weekly on Intercept, what you'll see is this stock literally was one day $75 and the next day it was $500. And so it moved up huge. And now look at this. It is downtrended for 5 years. And they have some sort of a liver medicine or treatment or whatever. And so it was huge news on the day, and the stock went ballistic. And if you got sucked into the hype and the story and everything else about everything the stock was ever going to do, you would now currently own it at around $55, $70 today. And so this is obviously a hard hold with a promising story. And once a year, the scooter ranking has risen up to a really high level. And here it's doing that again. And so the reason I ask if you would own this stock is because it's now built a full 1-year base and it's trying to break out to the top side. And it hasn't done it yet. And so the trick here would be, if this is going to start to move, you probably want in. And the reason is because the stock is starting to behave differently. Whereas here it had a slow grind up every time and then it failed. Here it's gone sideways and now it's starting to work its way up. So the reason the character is different is in all of these cases here, it was kind of a sudden move up, sucked you in and dropped down, sudden move up and just kind of worked you out of the stock. What we want to see is an actual base where it kind of builds a rounding bottom. This in here might be described as that same sort of thing. You can see it tried to push through here and then fell apart again. It's a hard trade, and that's the point I want to make, is all of these are hard. Now let's go look at Shake Shack. And the reason I'm bringing up Shake Shack is this stock was a $20 stock to start, went to 50 on the first day of its IPO or whatever, and then went off to $100. And at $100, I think there were some people on TV talking about how the stock could go to 1,000. It's way better than a McDonald's, and it's the best burger chain around. And the owner was a great chef in the world, and the restaurants are fantastic, and the stock, whatever. Whole story. You lost all your money, went all the way back down to near where it IPO'd, and it's built this year-long base, 2-year-long base. Let's just go put in a line at $40. And the idea behind this line is just to show you how this base is setting up, and we're starting to break out. And so this pink line here, you can see it squirting up to the top. And as it's doing that, this is the typical breakout that you want to see from a long base. And I would expect this now to start riding up and actually become a real stock. And lastly is Twitter. We're going to take that same stock. We're going to put this line down here at $22, just to pick a level. Maybe make it a little thicker. And the idea being that now the stock is breaking out and it's starting to work out of its base and become one of those big leadership stocks. As that type of setup starts to occur, the one thing that you can do, when we go look at those stocks back in the scan that we ran, or the industry group that we set up, highly volatile, but we start to see these same traits over and over again. Scooter starts to break out, the stock is breaking out of a big base, and you're starting to get big moves to the upside. So with that, I'm going to just quickly scan for questions. Zach, we've got time for one or two, and then we'll have to wrap it up.
Absolutely. I got one question for you. Hi, Greg. Was wondering if you could discuss techniques for setting up long-term stocks for trend reversals. And he's obviously saying this might take more time than just one question. So maybe if you had a comment or two about that for some of the stocks that you just showed.
Sure. I think one of the things that we need to be aware of when we're doing this is, something like the full stochastic sitting up here around 80, and when it starts to break below 80, perhaps that's your signal to either lighten up or put protection on or sell or whatever. But you need to use something on a weekly chart for long-term reversals. And so looking at a daily chart isn't going to give you a long-term reversal signal. It might break a trend line. But for the most part, what you're trying to find is something that looks meaningfully different on the chart. And so I will try to cover those off in future shows. I hope that this show gives you more ideas of ways to set up your account for profit. And I really do want you to, to look for the actual stocks in the market and find ways that you can find good ones. And with that, thank you for joining us on today's show. The final bar airs live on Thursdays at 5 p.m. Eastern and can be found on StockCharts TV. It's also available on YouTube. So we'd like you to take the time to view it at your convenience. Feel free to comment on the show in the survey box below. And with that, great trading and have a good weekend.